It's time for the Southern California housing market update. Things are starting to change in Southern California, and if you're a buyer or seller, you'll need to see these numbers. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best decisions in this crazy market, and it's time to run through the numbers for May of 2022, and things are finally starting to look interesting. For the longest time, I've been doing these updates and was up in every number, but things are changing. So if you're ready to dive into the Southern California housing market update for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button and let's get started. A discussion about the market wouldn't be complete if we didn't at least take a quick look at interest rates and what they've done recently to see what effect they're having on the market out there right now. So here we have Freddie Mac's handy tool where they are tracking what is going on with interest rates, and we can see the dramatic increase we had starting in January. Rates went through the roof. February went down a little bit, then March, it was all bets off, going through the roof, and that's what we've been experiencing through March, April, May, and then recently in May, we saw them peak and start to go down a little bit. We have a lot of ground to cover, so I'm going to run through these numbers. I'm going to run through your Altos reports. I'm going to run through the median home price. So let's dive in. If you remember in middle of April when I was running numbers, I was talking about how this looked like a bird and how it matched evenly on 2018 and 2019 and 2021, 2022. It looked like a well-matched bird. And I said, if the bird started to tilt, that's when we have to worry, maybe. Well, the bird is definitely tilting. So let me get sold out of the way, and you can see, and this same trend you will see throughout all the counties we're covering in Southern California for single family sales data, that the pending sales are down, and they're down below 2018 and 2019 levels for pending sales in all the counties. We've talked about why this is a possibility, why this potentially happened, and one of them is that our listings are down. So you can see that we have a lower number of listings in 2022 than we had in 2018 and 2019. So while inventory is down, that makes it harder for buyers to lock properties up. But at this point in time, it's becoming undeniable that interest rates and inflation and fears of a recession and things like that are leading to a slowdown in the market. We can see that we're down in 2022 for new listings and pending sales. They're close together. Now, not as close as last year. 2021 was an absolutely on fire market at this point in time. It's not like 2018 and 2019, so it still feels like more of a seller's market because of the lack of inventory. But we have to continue to track this and see. As these get farther apart, this is going to lead to opportunity potentially for buyers in the market. There's your Orange County numbers. Moving on to LA, and LA has been a consistent market, but the same thing. We get the sold out of the way and we're down. We're down below 2018, 2019 for pending sales. 2021 was an overheated market. Things rallied back and it was a crazy seller's season back then. We are moving to a more normal market, but we're also kind of moving past that into lower pending sales. So LA's market is slowing as well. We still have a big gap between new listings and pending sales, but it's approaching 2018 and 2019 levels. So this is not as extreme of a seller's market. What's interesting is in some of the marketing I still see out there from real estate agents, maybe on social media, they're still making it seem like the market's absolutely on fire. They may not know that things are shifting because they're not selling enough to know, but we're definitely, anecdotally, we've been seeing this for a bit, and now it's showing up in the data. So we can see here Riverside, which is the market we've been joking, you drive until you qualify, where Orange County, LA are more expensive, so people would drive out to Riverside from Orange County in particular until they could qualify. Well, what happened? Gas prices went through the roof. So those people who are driving are paying a lot more for fuel, and those who maybe would have driven till they could qualify have decided, no, I'm not going to because this is going to be way too expensive. So that's the effect of the increase in pricing on gas. So you can see that the pending sales are down almost below 2020, which is crazy to see the pending sales that low because that was an anomaly and a record low then. And we see that we have an increase in listings, again, lower than 2018 and 2019, but that's a big gap. Really going to have to watch Riverside closely. The markets that are the drive till you qualify markets sometimes shift before any of the other markets do. So this could be the sign of a shift, and a much bigger shift than maybe some folks are expecting in the data in Riverside. You got to subscribe and you got to keep watching to see what's going to happen. San Bernardino for single family sales, we can see that the bird is tilted. Something's going on here. Let's get the sold out of the way so we can really look at the data. And this is interesting. We see that the number of homes going under contract in May of 2022 is lower than May of 2020. Now, again, this was during COVID, but we were already rallying out of slower times. And I will tell you that in June and July of 2020, we started to see multiple offers. I remember because I had clients trying to buy at that point in time. This is an interesting trend we're seeing, and that gap between the number of new listings and the number of pending sales is a large gap. Not as large as 2018, 2019, but another market we need to watch. So this is interesting. My operations director, she runs these numbers, pulls it right from the multiple listing service, and then I put it into the graph so you can see how it plays out. So I'm just as surprised as you are. It's almost like double blind. It's single blind because I don't know the numbers until I put them into here. So this is interesting to see. Ventura has the fewest number of properties of all 6 counties we're tracking, and then because of that, fewest number of sales. But you can see that it is also following the traditional trend that we're seeing where pending sales are down. They're not quite at 2020 levels, but they're approaching, and we've got a gap that's opening up between new listings and pending sales. So this market seems to match the general trend in Southern California right now, and have to keep watching. And San Diego has been the hottest market recently, and we saw that in the Altos Research reports. We're going to show those again. This has been the hottest sellers market, and it's still a solid place to be, but the pending sales are down below 2018, 2019. Now here, because the new listings are remaining low and actually at our record low below 2020 at this point in time, this is going to feel like the most sellers market, to coin a phrase, the most sellers market in Southern California. So this market here is still the hottest for sellers, the toughest for buyers, but we're gonna have to watch and see what happens with these numbers. Quick interruption in the data to make sure you're still awake. And hey, just wanted to throw that out there. We're real estate agents based in Southern California. You're watching our updates. You watch all the knowledge we share. If you know anybody who's looking to buy or sell, there's nobody out there who's going to take better care of them than us and our team. So make sure you reach out. We have a contact us button below. Back to the data. And one of the only places you'll get the multifamily data, so this is everything 2 units and bigger in the respective counties. So let's look at Orange County, and we have a bird, and it's kind of looking like a normal bird for the most part. Let's get the sold out of the way. So not a big change, a little drop in the number of pending sales. Listings are up. So 2018 doesn't look too different from 2022. So nothing in this data yet. Although the only thing I'll say is it's the least amount of a seller's market that we've had in a while. So we're starting to see an increase in inventory, and we have the reduction in the number of properties going under contract. So while multifamily was flying off the shelves in Orange County, we're starting to see now that buyers are going to be able to be a little bit pickier in choosing which properties they want. Moving on to LA. So let's flesh that out for a moment. Where would buyers be pickier? Well, once they have more inventory, like we're seeing in Orange County, and let's take a quick look at LA to see what we see. So again, similar to 2018 and 2019, down a little bit in pending sales, but also down in the number of properties listed. So as buyers can be pickier when they're buying multifamily, as investors can be pickier, what that will allow them to do is to choose buildings that are more turnkey, so buildings that need less work, and also buildings that have higher rents or more units that are close to market rent. In an ideal world, and just about every market out there, the property that is the most turnkey, that has the highest rents or the rents that are closest to market, that property will always trade unless you've got some ridiculous crazy number on it, but those will trade. If your property needs work or it has really low rents or tenants not paying rent, then you're going to trade for less. That was not as much of an issue in the market, but now it's going to start to be as we see these numbers. So let's take a look at Riverside. Tends to be a more affordable market for investors. Pending sales are down compared to 2018, 2019, but the new listings are down. So you can see 2021 was actually kind of a solid market. Sellers were listing, buyers were buying. We see a drop here in 2022. And this is a result of interest rates going up and changing the amount of return that investors need. To cover the debt service, you're going to need more income. The units are going to have to generate higher income. So this is going to affect the cap rates. And I mentioned in another video, and I do need to do content on this, the cap rate is actually a function of the income and expenses and does not include the debt service. So those are independent numbers. It doesn't include mortgage payments. But the thing that's important with that is the amount of income that comes out. So when you take the income, subtract the expenses, and then subtract the debt service, you're left with cash flow. So the cash flow is going to shrink as the debt service goes up, as interest rates go up. So investors are going to be a little pickier and not going to want low cap rates. They're going to want higher rates of return. I'll do a whole video on this, so you don't have to bother tuning in right now. San Bernardino, that we have a drop in the pending sales, not too far off of 2019. In fact, this looks a lot like 2019, but a little bit more for sale. 2018 in San Bernardino was an interesting time where there was an excess of inventory. So that was an extreme buyer's market there. Now we have a kind of a more balanced market, but leaning to a buyer's market in 2022 in San Bernardino. Ventura, always all over the place. Not much we can glean from this data. Doesn't look too different from a normal market. Pending sales are down to 4, which is much lower than other times, but there aren't that many buildings that trade, so this statistically tends to happen. So you can't read into that too much in Ventura. You're just going to have to price your building right if you're there and realize the fact that investors are going to want higher cap rates. And then San Diego has been a hot market. A lot of similarities in San Diego and Orange County in single family and multifamily. So actually we have an increase. 2022 is a more solid market for multifamily in San Diego than 2018, 2019, not through the roof like 2021 was. And we have fewer listings than any of those times. So May 2022 for multifamily in San Diego is a seller's market, and more of a seller's market than it has been in years past. I told you we got a lot of data to cover. Now we're going to dive into the median home price. And the reason I'm showing you this data back here and the reason it's so tiny is because I want to show you more. I got to give you perspective. I'm always talking about perspective. We want to see what typically happens from April to May. Does the median home price go up? Does the median home price go down? So we're looking at the past few years here. So we can see in April 2017 to May of 2017, the median home price stayed flat or went up in these 3 counties. And then we go ahead and zoom forward into 2018. From April to May, they went up. Was a little flat in Riverside. And then let's keep going, stick with me here. March of 2019, April 2019 to May of 2019. So in Orange County, we had a bit of a drop. LA went up and Riverside, a bit of a drop. 2020, we can look at that, but that's less accurate data. In fact, probably not even no point in doing that. It dropped because of COVID. And then 2021, again, the numbers are skewed, so really not all that helpful, but we'll look at it. So it went up in all the counties. All right, so what happened now? That's really what matters. So we can see April, we actually had a drop in Orange County median home price. And that's month over month we're talking about, because we're going to talk about year over year in a minute. So month over month, we had a drop in Orange County. LA, a slight drop, and Riverside, it went up a little bit. So that's an interesting trend. Now, Orange County has been the highest number and an extremely high number for the median home price. So I'm not completely shocked that as things slow a bit, that the median home price is going to come down in Orange County. It just is slightly atypical for it to happen from April to May. So that's something to note and why we need to keep tracking the numbers. It normally should have either stayed flat or gone up a little bit at this point in time. So definitely something to keep watching. And LA and Riverside wasn't as much of a change, but we did see that drop month over month. Let's talk year over year. So as the market shifts and we get to a more normal market, and let me back up there. What I mean by a more normal market. A lot of people think we're immediately, everything's going to crash and it'll be 50% off by the summer. I saw some ridiculous clickbait YouTube videos stating that. And that's just not the case. What's going to happen is we're going to go from 20% year over year in appreciation. That's going to drop. It's going to go to 10. In fact, we're already seeing that in LA. And then it'll maybe go to 5, and then maybe it'll go to 3, which is really what it's supposed to be, around 3 to 5%. But also don't forget that certain times a year, the median home price drops anyway. So let's go ahead and quickly point out. So Orange County year over year, it's a 20% increase in the median home price, which is completely unsustainable. That number will start to drop. So we're going to see the year over year drop. LA County, it dropped. So we're at 10% year over year. If you told somebody 2 or 3 years ago that values would go up 10% in a year in Los Angeles, they think you're absolutely nuts. There's no way that could happen. Well, when we come from 17, 18, 20% in LA County, and now we're at 10, everybody's panicking. The sky is falling, but it's really still not at a decent sustainable level. 10% year over year is too high. And then Riverside's at 15.8, so that's definitely an unsustainable level. So very important to look at month over month to see recent trends, and then year over year to see. You're going to see this slow down. Don't panic yet. We'll let you know when to panic. Diving into the rest of the Southern California counties. So we're going to look here. You can see that for San Diego and Ventura, it's very choppy with median home price. 2017, it looks like April to May that it went up. And that's the general trend. We'll just say that that's what happened. You can subscribe to my newsletter and play with the data, but let's just assume this time of year from April to May that things go up. So what happened month over month this year? It looks like San Diego's flat. Looks like Ventura, we have a big dip, and San Bernardino went up a little bit. Year over year, what happened? San Bernardino is up 18.6%. So this was higher. We've seen over 20%. So this is a slowdown in the increase in median home price while still up month over month. Ventura took a dive month over month, but is still up 11.4% year over year. So that's a huge increase, but we're going to continue to probably see that slow, that level of increase. And then San Diego is up about 16%. So another hot market continues to move along. So again, we're going to see these percentages year over year start to shrink. Don't panic. Just keep tracking the data. And we've added in the Altos reports. You need to make sure you subscribe if you haven't. You can literally search for any city across the nation. You just type it in up at the box at the top and you're good to go, and you can subscribe to that report. I'm going through the county reports right now. You can do any city or zip. And you can also sign up for the county reports if you want those. Reach out to me and let me know. And there's a link below to sign up for these. But let me go through these quickly so none of us fall asleep. There's a few things I want you to look at as I run through these counties. You're going to look at that market action index kind of right in the center of the screen there. And that is telling us it's a seller's market. And you're going to see that for every single one of these counties. It is a seller's market. There's no denying that. But the gray is last month. So you can see month over month that the seller's market reduced in all of Southern California. So it's not as strong of a seller's market in the Southern California counties. The other thing we're going to look at that's important as a leading indicator is inventory. I'm going to show you that. I also want you to keep an eye on median days on market. That's going to show us if things are changing. So there'll be two things that change that are leading indicators. That'll be the median days on market, and that's going to be the inventory. We have to see those both increase, and then we know the market's going to change even more. So inventory wise, you can see you've got a 7-day average, 90-day average. Inventory is up in Orange County. I'll get rid of the 90-day. Let's look at the 7-day. So it's up. In fact, year over year, that's what these dots are here. We have more inventory in Orange County now than we did last year, but not than 2020 and not than 2019. So that's important to see that it is increasing. That is a big increase. We may start to see the median days on market go up. That's when we have to really be keeping an eye out and watching. Los Angeles, again, month over month, you can see it's a little bit less of a seller's market. Inventory is up. Look at the 7-day. It's up a little higher than last year. Not as high as 2020, not as high as 2019. Median days on market, that's why you need to subscribe to these reports, is to see how that's trending as well. Riverside, less of a seller's market. Inventory, how you doing? You're up. You're up. More inventory than last year. You noticing a trend? Not more inventory than 2020 and not more inventory than 2019. So things are moving up. in all these Southern California counties. San Bernardino, same trend. Nothing new here. I want you to subscribe so you can see these. You can actually see San Bernardino. We're getting close to having the same amount of inventory we had in 2020, but it's not 2019. Ventura, inventory's up. I'm using the 7-day average. It's a little choppier, but shows what's going on more immediately. Inventory's up slightly, but not to previous levels. So San Diego last month when we ran this was 100% a seller's market. Couldn't be more of a seller's market. It's now at 91. So an extreme seller's market, but not as strong as last month. And you can see inventory is ticking up, not crazy high levels, same trend. In fact, here, let's look at this. This is what you can do, the market action index. The 7-day average is just nuts, so we'll get that out of there. But you can see that it peaked at that 100% seller's market. It was like that in 2021 at this time. It didn't hit 100, interestingly. And you can see where it normally is, like 2019 was like half. It was a 48. That's insane, like how hot the market has been in San Diego. So that's what I want to put in perspective. And this is an important point. I want to show you, you got to look at a normal market. Like 2019 was a normal market, and that's how solid it was of a seller's market back then. We've been in extremely overheated times, so it's easy to think that when the market shifts a little bit or even shifts a lot a bit, that we got to panic, but we have a long way to go to get to a normal market. And then once we get to a normal market, then we can talk about a crash if we continue on that same trajectory. But we still got a long time to go before we get to a normal market. Before you go, I got a few favors to ask of you. Number one is make sure you sign up for the Altos Reports. That way you'll also be subscribed to our free weekly email newsletter. I also want you to let us know in the comments below, what are you seeing out there right now in the Southern California housing market? Do you think the market's gonna crash? Do you think it's just a shift? Will values continue to go up? I want to hear what you have to say. Make sure you subscribe to this channel so you can get these updates, plus the SoCal foreclosure report, where we cover things as they change in the foreclosure market. Here's a playlist that you need to watch next to stay up to date on Southern California. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.